Hello, everyone. Hope you all had a wonderful holiday season. Now that December is officially behind us, that means that 2024 is in the books, and 2024 was a great year. The consumer was resilient, the economy was resilient, and the markets glided higher. We had 2 consecutive years, both 2023 and 2024, where the stock market was up over 20+% on the S&P 500. Wonderful returns, fantastic returns. Pretty uncharacteristic to see two back-to-back years have such strong returns. Not only did they have great returns, but this year we had 57 market days where we had new record highs in the market, which is unbelievable. It showed that the market really did just glide higher. It was a pretty relatively easy year when it came to not as much volatility. The market pretty much just went up for most of the year. So looking at some of the economic data that recently came out, if we look at the unemployment rate, currently sitting around 4.2%. If we look at the CPI rate, or the inflation rate that most people are familiar with, sitting right now at about 2.7%. Then the PCE, which is another inflation measure, that's the Fed's preferred indicator, is right at 2.4% as of the most recent reading. So it's still higher than that 2% target that the Fed has. It's remained sticky in this range, close to 2.5%, but it's a long way from the highs back at 9% back in the summer of 2023. So we've made a lot of progress. We're not quite yet where we want to be, but we are moving in the right direction. It just has been a little bit sticky in this area. So given some of this stickiness, we feel that the Fed will kind of pause for the time being, not make any significant adjustments as we kind of continue to see economic data come out, the new administration come into office as we start the year in January. So we feel that even though they made a 25% basis point cut in December, or a 0.25% cut in December, we still feel that they'll kind of pause for the time being, let some more data unfold, and let the new administration get into place before really making any further adjustments. Speaking of 2025, and as we look forward to 2025, just a few things to keep in mind. We still think that this can be a really good year in the market, but we do want to set expectations that it would be very uncharacteristic to have another 20+% return year in the market this year as well. We think it can still be a good year, maybe not 20+% returns to have 3 years in a row. I would expect, and we would expect, more volatility this year with a new administration coming in. That just leaves some unknowns, and the market does not like uncertainty, so it wouldn't surprise us to see some more volatility in 2025. Speaking of the new incoming administration, we'll continue to monitor as the new administration comes into office, gets things in place, how much of what was said on the campaign trail was campaign speak or just kind of campaign promises, and how much they're actually wanting to implement into an agenda. So we'll continue to monitor that. We'll continue to shape our outlook as we get more information. So looking forward to a wonderful year in 2025. Hope you all have a fantastic January. See you next month.